Definitely acknowledging this is people's homes, people's lives, but my job is to look at it from this economic insurance perspective. We ran a scenario analysis last night, this morning, with a low end on the insured losses of about $4 billion, higher end over 10, maybe could be 13, could be even higher, really depending. What caught me off guard was the amount of structures destroyed so quickly. So the reports were coming out that there was like 1,000 structures destroyed with zero containment of the fire. That's, historically speaking, that's
right.
Like half of a major event already.
Were they insured?
I mean, I don't know exactly,
you don't know.
But
right.
We just get structures, right? And that was probably mostly homes. Most of the homes are going to have some kind of insurance. It's not necessarily like a flood, hurricane situation where the coverage is iffy. It is generally fire as a covered peril.
Your tendency is to believe that Paris Hilton's home was insured.
Yeah, I don't know about her specifically,
I'm not making a joke about it,
I know
just a general.
Yeah, I mean, one thing I would say is, so these mega high-end homes, Chubb is a name that does a lot of business there. I've heard anecdotal cases where the insurance is so expensive that you might have someone say, I'm just not going to buy it for my $15 million house or something, but that might be the exception more than the rule.
So, I mean, what I think we've all learned with all these natural disasters over the year, particularly hurricanes in Florida and on the Gulf Coast, is that some of that stuff is just not insured.
Right.
And flooding, not insured in some cases. Fire generally is insured. Is that kind of the way we should think about it? There's a higher level of fire insurance versus maybe hurricane, flooding, all that kind of stuff?
Yeah, I mean, fire is going to be more of a covered peril across the board. So like we had the hurricanes in Florida, Hurricane Helene and Milton, like there was a lot of flooding there, and you'd see the economic loss be, many multiples of the insured loss. Here you'll still see that dynamic of when you hear a large economic loss number, the insured might be much smaller, but as a percentage, more will be insured.
What did we learn from the horrific Maui fires? I mean,
Yep.
It's not funny, but it was a precursor to this devastation. Did your industry learn something from that?
I'm going to say probably not a ton. The problems in the markets are unique. So like Florida is different from California.
So what's California like?
So in California, and what you're going to see, I'm seeing a lot on social media, is, oh my goodness, State Farm was canceling policies like months and weeks before this, things like that. What is happening in California is this wildfire risk coupled with regulatory risk. So the home insurers in the state are saying, we're not getting adequate pricing for the risk we're taking. The state is saying, yeah, we're not going to let you basically get adequate pricing. So a lot of the private companies are pulling out.
So who is it, like Florida, where the government is insuring in some way?
Exactly. So there's a FAIR plan in Florida, in California, which the insurers contribute to, and that is kind of this insurer of last resort.
It's a reinsurance package in Sacramento.
It's an insurance package that buys separate reinsurance. So it is basically insurance through the government, partially funded by companies in the state.
Well, I owned a home in Northern California for many years, and it was hard to get insurance for fire, but we were able to. But we then, probably 5 years ago, those insurers pulled out, so we had to go to Lloyd's of London. These are the people that insure like cargo ships going through war zones. That's where we had to go.
So I know, Matt, you were on the phone with Mr. Buffet last night. But the answer is, in the Warren Buffett reinsurance world, you should see Matt Palazola in shorts in Hamilton, Bermuda with knee socks.
I can imagine.
Looks like a piece of work.
Every weekend.
What does this mean for the reinsurers, the Hamilton, Bermudas, the Lloyd's of London people?
So this loss, should it get to 8, 9, 10 plus billion, it will impact the reinsurance industry. I'm not going to say it's probably not a major loss for reinsurers, probably not for Buffett either. It will be, I think our takeaway was, this can be a sizable industry loss. Like Hurricane Helene, the best estimate of that was like 11 billion. So,
what do you say about the $50 billion statistic out on social media from people completely unqualified?
So, I had referenced economic versus insured earlier, and I think that's the number you're hearing is economic. So they're including a whole host of things that may not be insured.